The 2008 financial crisis was a global phenomenon that began in the United States and had far-reaching implications for the global economy. The crisis was caused by a combination of factors, including the housing bubble, risky financial practices, and the failure of regulatory mechanisms. The housing bubble was fueled by low interest rates, easy access to credit, and high demand for housing. Banks and other financial institutions began offering loans to people who could not afford to pay them back, leading to a surge in demand for housing. As the bubble began to burst, many of these borrowers defaulted on their mortgages, leading to a collapse in the housing market. At the same time, financial institutions had engaged in risky practices, such as the securitization of mortgages and the creation of complex financial instruments known as derivatives. These practices created a web of interconnected financial products that were difficult to understand and assess. As the crisis began to unfold, large financial institutions began to fail, leading to a credit crunch and a sharp decline in the stock market. Governments around the world responded with massive bailouts to prevent a total collapse of the financial system. The role of Lehman Brothers. Lehman Brothers was a large investment bank that played a significant role in the 2008 financial crisis. In September 2008, Lehman Brothers filed for bankruptcy, which had far-reaching implications for the global economy. One of the key ways Lehman Brothers affected the 2008 crisis was through its exposure to the subprime mortgage market. Like many other financial institutions at the time, Lehman Brothers had invested heavily in subprime mortgages, which are high-risk loans given to borrowers with poor credit histories. When the housing market began to collapse and many of these borrowers began to default on their mortgages, Lehman Brothers suffered significant losses. As investors lost confidence in Lehman Brothers' ability to repay its debts, the bank faced increasing pressure to raise capital. However, as the crisis deepened, it became clear that Lehman Brothers was unable to secure the funding it needed to stay afloat. On September 15, 2008, the bank filed for bankruptcy, which had a domino effect on the financial system. The bankruptcy of Lehman Brothers caused a banking panic, with many investors pulling their money out of banks and other financial institutions. This led to a severe credit crunch, making it difficult for businesses and individuals to access credit. Stock markets around the world also plummeted, leading to widespread panic among investors. The collapse of Lehman Brothers also had wider implications for the global economy. It sparked a deep global recession that lasted for several years and caused significant job losses and economic hardship. Governments and central banks around the world responded with massive bailouts and other measures to prevent a total collapse of the financial system. Similarities between 2008 and 2023 recession. The 2023 financial crisis is characterized by similar factors such as excessive borrowing, risky investments, and a lack of regulation as the 2008 financial crisis. However, according to Moody's and Goldman Sachs, 2023 won't see a thunderous crash like the one that sunk the global economy in 2008. Instead, they're planning for a creeping slowcession, or even a soft landing that smothers inflation without stifling growth. The 2022 to 2023 recession is likely going to feel like any other on the surface level. The time frame will typically take less than a year, jobs will be lost, interest rates will be high. Ends. The crisis had far-reaching implications for the global economy, leading to a prolonged recession and high levels of unemployment. It also led to increased scrutiny of financial practices and regulatory mechanisms, with many countries implementing new regulations to prevent a similar crisis from happening in the future.